Hey there and welcome. We all want to feel like we're in the driver's seat with our money, right? But the biggest question is often, where do we even start? Well, today we're going to map out a clear, step-by-step path to your financial freedom. Let's jump right in.
So let's just cut through all the noise for a second. If you forget all the complicated jargon, all the crazy advice you see online, what's the actual first step to building real, lasting wealth? The answer is probably a lot simpler than you think, and honestly, it's the foundation for everything else we're going to talk about.
You know, every great journey has to start with a why. So this is our call to adventure, really understanding why getting a handle on your finances is so critical. And look, this isn't just about getting rich. It's about building a life where you have stability and, more importantly, where you have choices. Think of it like this. Being financially literate is like gearing up for an epic quest. It's the shield that protects you from all those common debt traps out there. And it's the map that guides you toward real long-term stability. Making smart, informed decisions with your money, that's the superpower that makes this whole journey possible.
All right, theory's over. Let's get practical. Now we're going to talk about building your financial foundation. These are the absolute non-negotiable first moves that will set you up for success. Get these right, and trust me, everything else gets a whole lot easier.
There's a saying, you can't manage what you don't measure, and it is so true with money. So, step one, your very first move is to get a crystal clear picture of your cash flow. You list every single dollar coming in, you track every dollar going out, and then you just look at the difference. This one exercise can be a total game changer, I promise you. It tells you exactly where your money is going.
Okay, next up is your financial seatbelt, the emergency fund. Because let's be real, life is unpredictable. An unexpected car repair, a medical bill. These things can completely derail you if you're not prepared. This fund is your cushion. It's what protects you from having to dive into debt when things go sideways. It is absolutely essential.
And look, budgeting doesn't have to be this big, scary, complicated thing. A really fantastic starting point is the 50-30-20 rule. It's super simple. 50% of your take-home pay goes to your needs, rent, food, utilities. 30% is for your wants, the fun stuff. And then a crucial 20% goes straight into savings and investments. It's just a clear, powerful framework to get you started.
So once we've got that solid foundation built and we're feeling secure, it's time for the really exciting part, the path to growth. This is where we shift our mindset from just managing our money to actively making our money work for us.
Okay, first things first, we need to get one thing straight. The difference between saving and investing. They are not the same thing. Saving is all about the short term. It's preserving cash for things like a vacation or a down payment on a car. Investing? That's the long game. That's about putting your money to work to actually grow your wealth for those huge goals like retirement.
Now, the real engine of all this growth is something called compounding. Seriously, this is where the magic happens. Think of it like a snowball rolling down a hill. Your investments earn money, and then that money starts earning its own money. It just gets bigger and bigger, faster and faster over time. The earlier you start, the more powerful this effect is. It is the single biggest advantage a young investor has.
But where do I even start investing? I hear you ask. Well, it doesn't have to be intimidating. For beginners, it's really smart to start with lower risk options. Things like fixed deposits, government bonds, or broad market index funds are just fantastic ways to get your feet wet and build some confidence without taking on a ton of risk.
And as you do start investing, just always keep this golden rule in mind. Don't put all your eggs in one basket. We've all heard it, right? It's called diversification. It just means spreading your money across different types of investments to lower your risk if one of them doesn't do so well. Simple, but so important.
Of course, no great journey is a straight line. There are always challenges. So this part is all about learning to spot and navigate those common obstacles, the money traps that can so easily pull you off course if you're not paying attention.
So here are 3 of the biggest pitfalls to watch out for. First, living beyond your means, letting lifestyle creep get the best of you. Second, ignoring that emergency fund we talked about. And third, getting tempted by those get-rich-quick schemes instead of focusing on steady, long-term growth. Just knowing about these traps is half the battle.
Now, if you're already dealing with some debt, don't panic. There are 2 really great strategies to tackle it. There's the snowball method, where you pay off the smallest debts first to get those quick wins and build momentum. Then there's the avalanche method, where you target the highest interest debts first, which actually saves you more money in the long run. Honestly, they both work. The best one is the one you'll actually stick with.
And finally, let's talk about the destination.
The real secret to all of this is that financial freedom, it isn't really a place you just arrive at one day. It's a state you maintain. And that is all about building the right habits that lead to lasting success.
So, what's the secret ingredient? What's the one thing that ties this all together? It's not some hot stock tip. It's not a complicated strategy. It's just consistency. Consistently saving, consistently investing, and consistently avoiding unnecessary expenses. That's it. That's what builds true, lasting wealth over time.
Look, if you only take one single thing away from our entire journey today, please let it be this. This one sentence captures the entire philosophy. Live below your means, invest regularly, and let the incredible power of compounding work its magic for you.
So this isn't really the end, it's a brand new beginning. The only question left is the one you've got to ask yourself. Based on everything we just covered, what is the one habit, big or small, that you will commit to starting today?